everyone, and welcome back to another video. Please do subscribe if you have not already. I really do appreciate it, and I make more videos the more I see subscribers are coming through. Also feel to go over to my TikTok as well at the same username, Matt Talks Finance, and you can go see some pretty cool videos over there, if I do say so myself. Alright, let's get right into this one. This is Meta, so this is Facebook. They just came out on Thursday, Friday of this past week of July 9th, 2023 with Threads. This is a direct competitor now, brand new, 70 million subscribers or users, whatever you want to call them, as a direct competitor to Twitter. And it is already basically looking like the Twitter platform with the way you can talk, the way you see things in a timeline, the way you follow people, like, retweet, whatever you want to call it, replies. It's a lot of the same stuff. So with that, let's look at where Meta is right now. So Meta took a beating in 2022. It was not, everyone's darling, but 2023 it has skyrocketed. It has seen a huge growth in 2023 so far. We'll look at the last year as well as how Meta has done in 2023. So first of all, it's got a smart score on TipRanks of 6. Not what you want to see. I usually personally invest in things that are 7 and above. Meta with the new Threads, I think this is a new advertising play. One complaint about Twitter has always been that advertising, they know nothing about their users and that they have no tailored ads to you. It's just very random and generic. Facebook has always been very good at targeting you specifically with what you look at, by giving you ads on your Facebook page, on your Insta, as far as what you search, what you like, what you comment on. Like, they give you all kinds of ads for those kinds of things. Twitter has never found that out, and it has no idea who their users are or what you're doing there, what you're liking, and what advertiser should be put in front of you. So I think that this will be a 9 by the end of this year. Mark that down. And as far as analyst forecasts go, it kind of goes to the same thing, where there's a strong buy, 36 buys, 4 holds for Meta, and it looks like about a 4% upside from where it is right now for an average price target of about 304. And if we start to look at the actual financials, we can see that, like I told you, Meta had a very bad 2022, considering it's a huge growth stock, growth company. They went down in revenue. They actually dipped for the first time in a long time. And so with that, their income definitely dipped. It's all year over year, so 2022 over 2021. Relatively compared, they had a really bad 2022. Even though 23 billion is a lot in profit, it's like a 20% profit margin, 21% profit margin. That's not good for Meta because they're, basically the same. If you look 2022 versus 2021, basically the same. And then net income dropped $16 billion. So that's a lot. That's a huge drop for basically having the same revenue. Their just gross profit just wasn't that great, and their operating expenses soared, as you can see. So anyway, with that being said, let's go over to the balance sheet. Total current assets of about 59 billion, total current liabilities of about 27 billion. So they have about double, working capital. So that's really good. That's what you want to see. That's baseline of what you want to see with a company, is something that's like that. Total current debt, they actually did take out a little bit of debt in 2022. Not sure why they did that. That's not very smart for a company like Facebook. Why would you do that? Or I should say Meta. Why would you do that? There's really no point. Was that a loan? Or I don't know why they did that, but 9.9 billion. So their let's see, their total liabilities overall are about 60 billion, and total assets of about 185. So again, you're working very, very well, about 3 times the amount that you would need in order to pay off all your liabilities. So that is what we like to see. That is a good thing. If we go over to their cash flow statement, we can actually see, sorry, let me put this back up there. So we can actually see that as part of the cash flow statement that there's the debt they issued in 2022. They repaid debt. I think this is like small amounts as far as like what they've paid. It was also has to do with like short-term liabilities as well, short-term debt. But they bought back less stock in 2022 as they did in 2021. And this year in 2023, they actually are expected to do quite a bit of buybacks. You'd have to do the research and you can comment if you know what the number is for what they're expected to do for buybacks in 2023. Feel free to comment that below as well. But they dipped last year. Everything was a dip. Everything was like a pullback. Everything was kind of slowed down. They kind of shifted away from their core, which was, you, the user, and advertising and marketing around you, giving you ads tailored to things that you look at and you're interested in, over to the metaverse, which is like this, 4D, fourth dimensional kind of playground, and it doesn't make any money. No one really spends any money in the metaverse right now, but obviously it's really good to see again in 2023. Facebook is back on track, and they actually, again, with the threads, that shows that they are highly cognizant, highly aware of the fact that they have opportunities with advertising and with marketing directly to people for the product that they would use.